Hi guys, today I want to make this short video about how to use the gaps I told you before, the new week opening gaps on the monthly and quarterly chart to have a solid bias for your intraday, and how you can implement this on your daily protocol or daily routine to know where is the next draw on liquidity using only gaps. Forget about uh, fair value gaps or highs and lows. Okay, we are going to use only gaps on this video, and you will find that this is very accurate in real time and in your trading, and it's quite simple for me. Okay, I told you the past video about the relevance or importance of this candle. There is this level, sorry, this price level. There is 50%. The event horizon between this. Imagine this yellow box here is a high time frame, like a new month opening gap, and this is another new month opening gap, and this is the event horizon. Okay, and I draw these candles here to represent also different kinds of gaps on different ways to print candles on this, also using this logic. So imagine we are using only regular trading hours. Okay, so basically we have only three different types of gaps, or only three different ways to open or to print candles. Okay, the first one is when this candle close here and we open on the next candle inside of the previous range of this candle, and we create between this closing price and this opening a gap. So imagine this is the market on close on regular trading hours, and this is a 9:30 opening. Okay, so we are trading above this new month opening gap, and we close above here. So where is the most likely price or draw liquidity of using this logic? The 50% between this gap and this is a high time frame candlestick. This is the monthly candle, and this is the daily. So we are anticipating we have more probability to move to this range than below the marketplace. Okay, because we close above this candle, this range, and now we anticipate a retracing to this range, this candle, to expand higher and take this previous day high and reach the 50% of between the event horizon. Okay, so when we have this model here, this is a complete model of trading, this specific way to print candle, because we are waiting to take on lower time frames here stop rate and reach the event horizon or an inefficiency of previous PM session range here. I'm not expecting to come back to the New York range here, because this is the 9:30 opening and this is the market on close. Okay, so the upper part of this candle is the last price action printed on regular trading hours, is the PM. So you can take the PM session low to offset or to offset accumulation and reach the 50% of this candle. This is the event horizon, and now we are moving towards the next high time frame draw liquidity, that is the event horizon of this monthly candle. Okay, so now we are closing above this event horizon range here, this price level, but the next day we are opening outside of the previous daily close. We are not opening like this candle inside of the range. This is really different. We are opening outside of the closing price. So this, between this closing price and this opening, we are creating now a new regular trading hours gap here. So now, what are we expecting? This is another complete model itself. I'm giving you here the source of my three principal models. The reason I'm doing this is because in the next videos I want to incorporate every video that I'm uploading here to the channel to make to give you my complete models using this logic of gaps and regular trading hours. Okay, so now this is another way to gapping or to opening. We are opening outside of this candle closing price. So what I'm expecting, I have this event horizon, and between this level and this, the 50% is another fractal event horizon between these two gaps, but I'm not expecting to come back to this deep discount. For me, it's enough to reach or this event horizon or the market on close of previous candle here. So open in premium relative to this candle close, we reach discount, this closing price, and now we are expanding higher to reach what? This high time frame new month opening gap. Okay, but now on the next day we have another scenario, another model itself. Now we have like the reversal profile. Now we are opening the same like this outside or very close to the high of this candle, but we reach this high time frame gap, and now we are closing below the closing price of this previous regular trading hours range. So now what we should expect after this? Now we are moving to here, and from here we can reach the next gap here, discount, and from here we should see if we want to go higher and use this level again and continue higher, or if we want to move from here to this level and go lower here. Okay, so this basic diagram here, you can have like a complete model to trade using this. Okay, so now I'm gonna stop this and let's move on to TradingView. Okay, using this that I told you on this previous video, this presentation, let's see. Now we have here the quarterly, monthly opening gaps, event horizon of quarterlies, monthlies, event horizon, and we are going to do the same of the presentation, but my focus on this video is only the previous weekly range. Okay, so now this is the 15 minutes chart. This is, I think, the best chart to monitor the intraday price action. Okay, so now This is the previous candle range, the weekly range. Previous weekly candle on regular trading hours, and look how we close just above to this new month opening gap. Do you see? Closing above these levels. So on the previous on Monday, on the first day of the week, that is this range here. This is Monday, this price action here. Look how we come back to this Friday range. We took the PM session lows on Friday, on Monday, and we reached what? This gap. Look the body. Perfect. Now what is this? This is an offset accumulation. They are taking this range, the stops below these candles, order pairing or offset accumulation inside this gap, and now we are closing above this regular trading hours gap. That is this little gray area here. Okay, this is practically we are opening it's and on the presentation that I told you is this model, is this one. We gap higher of this candle closing, and we touch the closing price of the previous candle range, and now we are moving where? Higher. This is the model. This is my directional bias on this candle. This is the same here. We gap, we opening on Monday, and now we are doing what? Coming back to this upper range of this candle that is Friday price action, taking these lows and closing above and accumulating here on Monday. Okay, so now for me, I'm saying now if we are closing above this monthly opening gap and I'm trading very close to the quarterly of April, this quarterly opening gap, where is the most likely the next draw of liquidity for me? So I have this new month opening gap, that is June, and the event horizon above marketplace here. I'm not expecting, after seeing this price action on Monday, I'm not expecting to come back here. This is really key for me on Monday. Okay, so now look what they did on Monday price action. We close above the gap, and note the bodies respecting with precision the gap. We closed just below the opening gap, this regular trading hours gap, on these two both candles, but we respect this gap here. And what, remember on previous video that I told you that the market on close of the previous daily range is really important, really important. I think that this is fundamental to anticipate the overnight price action and the next day open. This is key, because they look on the market on close on Monday. We take this stop the short-term low here, and we reach the 50%, the consequent encroachment, and close above the gap. I'm not expecting to come back below this. We took this low, this short-term low here, and now we're closing above this price range is protect. I'm not expecting to take this low here. So the most sensitive, this is an order block on the 15 minutes. The most sensitive, when you have an order block with this kind of wicks, the most sensitive part is the wick and the opening and the high of the wick. So you have this range, and inside this range we run this short-term low here, and the next day we expand aggressively the next day because on overnight price action we move higher. So you can use I don't like to have like a lot of event horizons because I prefer to have only the monthly and quarterly, these high time frame levels. But if you have between this gap and this gap, we are opening above the 50% is the event horizon on this, and we are closing just at the new month opening gap of June. And note the bodies of the candle, or just moving, making this efficient. High, low, high, and now we leave the gap with displacement. This is telling us that we are moving now where? To the event horizon above the marketplace. Of we had another high time frame gap, I'm expecting to move towards that gap. Okay, so this was on Tuesday price action, and now this is Wednesday opening, and we opening and moving to the sell side to took this short-term low of the PM session and repricing this imbalance here. And I took this long here, this trade, all this trade. I took an entry here, and I was taking portion of this high, and completely to closing this gap. I took this trade. All this moving price here. I was expecting to come back at least to this gap, and you can offset positions above or at the regular signal gap and above this high as external liquidity. And I was expecting to come back to this level, but we didn't. We closed here to this BC, and the same thing on the market on close on the PM session on Wednesday. Why? They don't need to come back to this range on the next day because they offset accumulation positions around here. They took this short-term low here at the open at the market on close on the PM session, and inside this imbalance, this BC. On the next day we have the same scenario as this, the breakaway gap. So now look the event horizon between the Q2 and Q3, and I was expecting I was not expecting like this move. Ideally I was expecting to come back to this gap, but I was reading price and I saw that we started moving higher, so I was looking for a short-term low taking on lower time frames and looking for an imbalance to ride this, and I took a trade. I think it was here. Yes. Do you see how we open? And I waited to see if we wanted to move lower on this event horizon, but no, we run the short-term low here, and I was expecting to see displacement here, and I wanted and I found here a BC on these lower time frames here, but I didn't get my fill because I have like a rule. When I have a PC with a volume imbalance below, I want to enter at the volume imbalance ideally here. Same, because many times we come back to this level here, and now from here we move higher. Oops. Okay, this was my idea for the AM session, but I didn't get my fill here, but I waited and after we took this short-term low here, I found displacement here, and I took a long at the 50% of this wick here. You can see in my Twitter between this threshold, and you can this was my long at the 11 and 8, and this is inside the macro of 10.50, 11, 10, 10 here. This was my entry right here, and my draw liquidity was the new month opening up here. Okay, beautiful. And the other trade I took was this one that I told you. Took a long here. I took another long here. This is a breaker, and I was taking partials above this high, above this high, and at this opening, because this is an order block. We run buy side here, and this is like a safe area to take partials at this level here, but we run the buy side. It's fine, I don't need this move. I took this long here. It's a really nice trade. Okay, so do you see how we are using only gaps to find setups? I'm not using anything like order blocks, breakers, imbalance, fair value gaps, BCCBs, and mitigation blocks, rejection blocks on high time, anything. I'm only using gaps, regular trading hours gap and high time frames gaps to find my next draw of liquidity. Okay, and I'm using this logic, this, how I am opening relative to the previous day close, and where is my high time frame gaps, and using these key levels to find like the most possible or probable draw liquidity. You can look for the highs, but you don't need it. The most, imagine you are inside of this range. If you are trading inside of this candle, where is the most price is going to move only to two sides, to take this high or this low. But if you frame your trades considering these gaps, and you are, for example, I don't know, targeting the high, but we reached this new month or new quarterly opening gap and we didn't take that low or that high, and prices start to move into the opposite side, and you are thinking why we didn't take that high. Maybe on the other asset that has the correlation, you see that that run of highs or lows. But for me, it's easier to trade using gaps. It's really simple. It's really obviously to trade and build confidence and risk management and build the correct mindset, and that it's another complete story. But from talking from a technical standpoint, I think that this is the most easy way to define your bias using this logic that I'm telling you here, and it's fractal. I'm using this on the weekly candle, monthly candle, quarterly candle, and daily candles here. Okay, now let's see what we did on Friday. Okay. What is this model? Look, what are we doing here? Where are we opening? Inside of the previous daily candle. What I'm expecting to come back to this equilibrium or this event horizon, or to move to this gap that is open above the marketplace. Above the marketplace, because this is the nearest point. And we are trading using this new month opening gap as an area of accumulation, and also the regular trading hours gap here. So I'm not expecting lower prices below here, because my draw liquidity, my high time frame draw liquidity is the new month opening gap and the event horizon above the marketplace or below the marketplace. So we are trading basically at this is a hard way to trade when you are trading inside these gaps. Okay, where you can find low resistance liquidity runs trade when you are trading from leaving one gap to that, and you have this huge range clean and you don't have high time frame gaps. Price is going to move fast towards the next row liquidity, but once you reach this high time frame gap, I'm not expecting from here on a Friday to move aggressively to the opposite side. I'm not expecting that, because now we reach a high time frame level that is a monthly opening gap. Okay, but the model that I'm using here is this one. I'm expecting what I'm expecting here. If we are opening inside of this previous range, to look for a stop rate or an imbalance of this previous candle range and move to the opposite side. I'm not expecting a reversal inside, opening inside of this candle. Why? Why should I look for from here, from this opening, to look for the opposite direction of this candle? Only if we, on this closing price, we reach like the event horizon or a high time frame new month opening gap or quarterly, then I should expect like the opposite direction. But we didn't met that condition here on Friday. Yes, we met this new month opening gap, but because we were trading on Friday, I'm not expecting like this kind of reversal on this range. Okay, so if we move on to the 15 minutes chart, that is like the time frame that I look for stop rates or imbalance on my chart. And if you see that inside of this previous regular trading hours range, what do we have? Here, this is stop rate. And do we have an imbalance here? No, we don't have. So we have from this order block to this high, you look for a discount array and you have this opening. And we have here another short-term low here. And the most sensitive part of this order block is this range. So you look for to reach a discount array and look for at least to close the gap. You don't need to take this high. You can target this and the high time frame gap above the marketplace, that is this gap is open, all this area is open here. So we are opening inside of this candle. Look for this counter ray, and now we are looking for the opening of this, the closing price of this range, that is the regular trading hours closing price of Thursday. And you can look for this move, but you don't need it. Okay, now you move to the 1 minute chart, and this was hard price action. Look, this opening, we are consolidating because we are trading on this high time frame gap. But once we reach this counter raise, now price start to moving to the opposite side, but this is a hard price action actually. I didn't participate on Friday. I only post a screenshot of what I was expecting here to target this gap above here. But yes, this is the way I look for my directional bias. And now, for example, what I'm expecting on the next week. Okay, now we are trading really close to this high. Above this high, we have buy side liquidity, and between these two high time frame gaps, that is July new quarterly opening gap and August new month opening gap, we have this event horizon is the 50% between these gaps, and we have this regular trading hours gap also open. But what do we have here? We took this and we closed below here. So this range of these candles here, I'm expecting like this is a very sensitive area for me, because this is like a breaker on regular trading hours, because this from this swing we move and we take this buy side, and now we are closing below and we leave this breakaway gap open, so we can reach this price level, and it's just above the event horizon and above this buy side liquidity. We can just move towards this buy side, this opening, this gap that is open, and take this buy side liquidity and reach the all-time highs. Okay, this is also a scenario, but this closing price here and these wicks, this is a very sensitive price action, price levels. So I'm expecting to use this as a support and turn into as a resistance, or once we close above this event horizon, I would like to see if we use these levels as a support to continue then move higher. Okay, but let's see how we gap on Monday. Okay, this is a weekly chart. So now, what is the most significant price levels on this week? All the week between this and this, we have the 50% aligned with this Friday low. So maybe we can, this is not, I'm not anticipating this, but this is a scenario that could happen. We can move higher, and we are inducing buyers into the market. And now, after we reach a significant key level above this, around here, we can do like a reversal and look for discount. And then from here, around these levels here, we can look for a continuation after we are using this event horizon and this gap that is still open, and look if we can find a support around here or around here, and then continue to move higher to take the all-time highs again. But let's see what price does on Monday and the next week. But this could be like the third model that we have here. You see, we are trading really close to this buy side liquidity, and we have high time frame level above marketplace, so we can gap, induce buyers into the market, and they are using this level to offset the longs around here, and now we are looking for discount to continue to move higher. Okay, this is something that could happen on the next week. But I hope you find this insightful. Remember that all these things that I'm telling you on these previous videos and this actual video is to build us to study, and we are going to use this to build like a solid trading plan, and how we can use this to look for setups. But this is coming from next weeks. I'm gonna do this every week, and I'm gonna show you every component of my trading plan and how we are going to use this to find really good trades and setups. Okay, stay safe and have a nice weekend.